So, Themos, we saw some weakness, then since then, the yuan has stabilized. Does this look like the invisible hand of the PBOC to you?
It's very hard these days to see where the invisible hand pushes or doesn't push the button. What I would say is that they do have some flexibility around this band to allow the currency to move. Obviously, the yuan hadn't reflected that broader dollar strength. Now it's doing so. And it's also starting in the last few days or weeks to reflect the prospect of a slower economy as well. And that's what's causing a little bit more of a stare in global markets. There's a limit to all this. A, by the fact that the dollar is not going to be trending from here. B, by the fact that obviously it's not in the best interest of Chinese authorities to create a situation where they get outflows like they had a couple of years ago. So again, this is something that has actually surprised many people, including ourselves.
Yeah.
Has moved a little bit more than what we would have thought. But at the end of the day, it's something that will stabilize eventually down the horizon.
Is there a level that starts to concern you, like 7, for example, or is it just the speed at which we see the moves?
Not a level, because it depends on why we're reaching that level. If for whatever reason the euro is tomorrow at 110, let's say Italy gives us a nasty surprise, then you'd expect to see currencies adjust accordingly. But I think the rate at which it moves, and also whether it correlates with other major sort of like currencies, or whether it's an idiosyncratic move, they're both important things that we're looking at.
You were talking just now about the risk of outflows. Is there a way that the yuan can continue weakening for I don't know how long, but that China can still control outflows?
In the past they've shown that they can control that quite well. But it comes at a cost with further controls in terms of the capital side, which is not what they want in terms of the broader trajectory. So it conflicts with a broader goal. Generally speaking, China has this very different approach to policy over the last couple of years. They're tightening the asset side of the banks, but they're also allowing loan growth in some of the more dynamic parts of the economy. And you have seen that in the most recent data. That has different kinds of currency implications at different points of time. At this point of time, the weaker currency does bode well with a slightly easier tone into their overall policy. If that starts to conflict because of capital outflows, obviously the policy setup will adjust. It's a very dynamic way of thinking about their policy setup.